Hi, I'm Rick Ashburn, Chief Investment Officer at Creekside Partners. Our core investment philosophy is what many people would call value investing. Now, the term value investing might mean different things to different people, but I'll take a couple minutes and tell you what it means for us. A value investor realizes that the single most important factor in any investment's total return over time is the price we pay for it. It makes no sense to say, well, stocks have paid an average of 9%, so I'll buy some stocks and sit back and make my 9%. It doesn't work like that. The average doesn't matter. The average daily rainfall in San Francisco is a 1/16 of an inch, but if it's pouring out today, you'd better wear a raincoat. No matter how much money a company or rental property earns, if you pay too much for the asset, you will be forever disappointed. For example, the earnings per share in the stock market have increased nearly 100% in the last 14 years, but stocks are only up 30%, barely 2% per year. And the reason is simple. Investors paid too much for stocks 14 years ago. The companies did just fine. Looking at the broad stock market, we have a decent idea of the long-term average growth of corporate earnings. They grow about 1.5% slower than the economy as a whole. In theory, stock prices should follow closely to that average trend, but they don't. And because of that, stocks are sometimes cheap and sometimes expensive. They never follow the average line for very long. Now, imagine the course of your investment portfolio like a sailing trip. You know where you want to go, you know the basic direction to get there, say San Francisco to Hawaii. The average direction is west-southwest, the average winds are mild, the average seas are calm and rolling. And then when it's time to depart on your journey, do you just hop in the boat and take off because the average conditions are good? Of course not. You would check the weather and look out for storms or bad wind conditions. You might wait and leave another day, or you might take a meandering route rather than sail in a straight line. You might not get there as fast as the risk-taking adventurer, but you'll still get there and you'll have a safer and more comfortable journey. This is the core idea of value investing. Current conditions are what matter, not what has happened on average in the past. Investors make a terrible mistake if they assume that the return on some asset will be what was earned on average in the past. Today is not the past, and we have to pay attention to current conditions. And the most important current condition for investing is the price of the asset or its valuation. In our other videos, we'll talk about our process in more detail, looking at the stock and bond markets separately.